Are we headed into a recession? Has the market bottomed? What stocks am I trading? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone. A recession is defined as 2 quarters of GDP negative growth in a row. The first quarter of 2022 went down a negative 1.6%, and the forecast for the second quarters, it looks like it's going to be negative, but we have to wait for the official figures to come out. We are definitely in a bear market, and the stock market usually bottoms the most when you're in a major bear market and you've definitely gone into a recession. That's when the stock market reaches its bottoming point. And I don't think we've reached that quite yet. We're well on the road. We might be halfway to 2/3 of the way there, but until we see the figures, we don't know exactly. And there's some contradictory things happening, but one sign that a recession is on the way and is taking firm hold is when commodity prices drop. And it looks like commodity prices are starting to drop. So it's going to be, how much does the Fed want to push the market, not push the market, but push inflation down? By pushing inflation down, they do that by raising interest rates. They're going to raise it 0.75%, and that will have a major effect. And I think the critical point comes in September. What they do in September, what happens with inflation, they'll be able to tell better in September what effect they're having. And I think in September is the point where we decide whether we're at a market bottom or not. It'll be bullish if inflation does ease up in September, and I suspect the market bottom will be somewhere around September or October, but we have to see how this inflation plays out. Prices have already come down significantly, but I think the other shoe that's going to fall is that earnings are going to come down significantly. And you're actually going to get a reasonable price to earnings overall. It should go down to about 14, a price to earnings of 14. 15 is kind of average for the market. When it gets over 20, that starts to get high. But 14 would probably be the low point of this market, and it will reach that because the earnings have come in lower than expected. And I think at that point, we're probably near a bottom. Right now, it looks like the bottom will be about 3150, which is significantly lower on the S&P 500 than the S&P 500 is now. So looking at this chart of the S&P 500 year to date, 2022, you can see it's been a steady course downwards, and shorting has been the best strategy. And I've made a lot of money doing that. But it continues to be treacherous, and it's kind of a daily trade. And I don't recommend it for long term. It's a day trading strategy. And you got to be used to this and experienced with it to benefit from it, I think. But we can see that we're at over 3,800 right now on the S&P 500, and I think it's going to come down to around 3,150, probably another 20%. So we're probably a little more than halfway there right now. The signs of recession are all around us. Consumer spending has stopped accelerating. It recently went up only 0.2%, and in the previous month, it was 0.6%. So consumer spending was accelerating highly, and now it's starting to deaccelerate. A big item I'm going to be talking about, and I've already benefited from shorting semiconductors, and I'll talk about that more later in the video. but demand for semiconductors in computers and smartphones is decreasing. And several companies have warned about this. Micron announced that they gave guidance that the demand for semiconductors was going down. We have these signs that the demand is starting to buckle. And that's on top of there being supply chain problems because of China's lockdowns. Lockdowns occurring in China are very negative for the United States. Tesla has a factory in Shanghai, and they had to close it down because of the lockdowns. I think Tesla is going to be going down mainly because of China. I don't like saying that. I don't think that company deserves to go down, but it in fact is going to go down because of China. They will recover. China, I think this zero policy they have regarding their health problems is dubious at best, and I think it's causing major harm to Tesla. A sure sign of recession is the prices of commodities coming down because demand decreases. And that's what we're experiencing, that the prices of commodities, even oil, has come down somewhat. Now, a big factor in all of this is the war in Ukraine. Ukraine was taking it on the chin pretty heavily last week. I follow that war to kind of see how things are going. And I think the weapons they're getting from the West are starting to have an effect. And I've noticed this week the news is much more upbeat from Ukraine, and they're more than holding their own. It's probably at a stalemate. They were falling back somewhat, and now it seems like it's at least stalemated, and the Ukrainians are having some success. If some kind of truce occurs in Ukraine, that would be such major positive news, and I would be very bullish at that point and would at least invest in some stocks, anticipating the good reaction. This crash reminds me of the dot-com crash around the year 2000, only with a strange twist, and that twist is crypto. In 2008, the first thing to crash was real estate. So that's so very different from the crash now. Real estate will probably be the last thing to crash now. But if you go back to the dot-com crash around the 2000 year, it seems much more similar to that. We had such hopes for the internet, and they turned out to be right, but it would take another 10 years for it to get going, okay? And I think that's where we are with crypto. I think it has promise. I think Bitcoin and Ethereum are going to be something, but it's going to take a while for it to develop and for it to be used in everyday use. They're getting bad news almost every day. The crypto Terra Luna was a major collapse of a crypto. The exchanges are collapsing. Celsius froze accounts. So did Voyager. So you got all these major events going on. Three Arrows was liquidated. So you have all these major events going on, and it seems like it's an every other day event. So I think you're hearing the crypto people saying, oh yeah, now we want regulation. What happened? Do we want no central authority, right? Sometimes central authority can be good in dealing with criminals and stuff. So they definitely need to get on more solid footing, and that'll be part of the plan to put it together. But I think this has, I wouldn't say it's the cause of the crash. The cause of the crash is the major financial stimulus the Federal Reserve did by buying bonds of companies to support companies and stocks and bonds. Okay, they bought all these bonds. They bought $9 trillion worth of assets. Wow. Okay, and just injected that into the economy. and that is such a major thing. Uh, when they buy it, it tends to decrease interest rates. But now they're in the process of selling them. Okay, $9 trillion worth of bonds and assets. They're selling them, and that has the effect of raising interest rates, which will be on top of their raising interest rates by 3/4 of a point last month, and probably going to raise it 3/4 of a point in July. So I think the turning point will be in September. I think the cause of the crash is they bought all these assets, they lowered the interest rates, and the demand went off the Richter scale, and people bought and bought and bought, which is outrageous demand, which creates wild inflation. And now they're trying to deflate it, and it's going to be hard for us to have a soft landing when the need to deflate is so strong. Another thing that's different this time is what a major factor China is. This is a world recession. I think the inflation in Europe is probably worse than it is in the United States, and China is struggling. And it's weird how this all interacts. The United States is trying to decrease, I'm sorry, the United States is trying to increase interest rates. China is trying to stimulate their economy, and so they're decreasing interest rates. So the United States is trying to deflate, and China, with its stimulative policies, will inflate their economy. So basically, they're going to force us to keep strict interest rates in force and be very severe about it, because they're inflating the world and making inflation worse. And we got to kind of deflate to make up for all their inflationary moves of cutting interest rates, which will make us raise interest rates even more. China is in bad shape themselves. Some of their banks are on the verge of collapsing, but China is such a major player in the world, and it's because they're the number one country doing manufacturing right now. They do 24% of all the manufacturing in the world. The United States is number two, and we make 16% of all the things that are made in the world. So you have these two major world powers taking directly opposite approaches. And so this is going to take some time to work out. And in the meantime, I think we keep stumbling forward, and we stumble into a recession, and we will hit a bottom. But I think before we do major bottom, you want to see a turn, and not just be a bear market rally, which can be intense and which can last for a month even. So you want to be hesitant even at those times, although I probably will day trade it. But as far as long-term trading, I always pick good companies so that if I guess wrong and I'm stuck with it, I can ride it out. Okay, but I think I go into this bear trading mode, which is a day trading mode for me, because that's really the only way uncertainty like this can be traded, in my opinion. This is not financial advice, and you need to trade the way that's best for your situation. I don't know your situation. And this is something that I've kind of done that's unique, and it's taken me 6 crashes to learn how to do this, but I think I've got it down. And let's talk about some of these shorting trades. So my favorite day trade right now is socks. Okay, you got to hold on to your socks. Okay, SOXS, and this is the Direction triple leverage bear fund on semiconductors. Okay, for every dollar that the semiconductor index goes down, you make $3. Okay, and I swooped in on Friday and made some quick money, but this is the way you play this. I was sticking mainly with SQQQ, which was my favorite, but I think I'm playing stocks for a while and watching. I'm watching both of them. If I think the situation is right, I will swoop in. But this is more of a narrow trade. It's on semiconductors, which have been having a very difficult time. It's because of the reduced demand. Now with SQQQ, which is a triple leverage inverse fund, you make $3 for every dollar. The QQQ, which are the 100 largest companies on the NASDAQ, for every dollar that index goes down, you make $3. So they're both shorting strategies. They do it all for you. You don't have to do anything, which is, I'm incredibly lazy when it comes to these things. So I'm glad to do that. And also, I generally just don't like shorting. But you know, when you're in a major crash like this, it seems like it's the only thing I've found able to do that you can make money. I need to show you how I've been doing with SQQQ, which it's the largest 1,000 companies on the NASDAQ, and it's a triple inverse fund on them. So you make $3 for every dollar that the QQQ goes down on the NASDAQ. So it's generally been good. It's just that stocks has been spectacular for the last week, and that's going to catch a day trader's eye. So as you can see from the chart, during the last week, before the 4th of July holiday, SQQQ went up over 10%, which is pretty good, huh? Well, SOX, SOXS, went up over 33%. Geez, it does that for another 2 weeks. I'll make 100%, but I don't expect it to. But I think there's probably more to be had there. So I guess I could blame the devil, but I think it's the stock market that keeps forcing me to short this market. I don't think it's the devil made me do it or anything. I think it's just the stock market. I don't like shorting. I don't like to do this, but you're making over 100% in a year on stocks, and then SQQQ has made like 75%. I can't pass this up. And I was just so sick of losing money, and I lost major money at the beginning of the year. So but I've more than made up for those losses and then some by this wonderful thing called triple leverage inverse funds, which I probably will continue to day trade. I think it's dangerous. I think it's something you got to get used to. You got to have some experience with. But I've gotten to the point that I'm pretty comfortable doing it. So what's going to turn this market around is when inflation starts to go down. I think that's going to eventually happen, but it's going to take some time, or we get some major good news. And the most likely major good news is that a truce or something has been reached in Ukraine, and that would open things up considerably. And I would go long at that point, at least on some stocks. But I think the major event, as the Federal Reserve is correctly pointed out, is to get inflation down. I think they will be successful, but we got a little bit of a tough road ahead for a while. And you might as well make money shorting now, so you can use that money to dive in after it's made a definitive turn upwards on good news. Thank you for listening and watching. Be sure to like and subscribe and hit the notification bell if you want to be notified for future videos. And thank you, and good luck to everybody.